0.9%. On a yearly basis, it's in about, while the prices have dropped by 19.88%. A market cap at 230.26 billion yen. Also, Sony Electronics, Sony as a company, we're looking at the standings in it, gaining this morning 153 points, upward by 4.32%. Mitsubishi also gaining 3.23 points, and Hishi gaining 1.54 points this morning. Let's also look at African stock market and what the direction is for the African stock market. Indications from the African stock market has been compelling for many to see. A big question to talk about and see. First, we start with the Nigerian stock market. NSE All Share price level standing at 132,452 index points, gaining 625 basis points this morning, 0.47% appreciation on a weekly basis. The Nigerian stock market has gained 2.7%. Meanwhile, South African stock gaining 1,129 basis points this morning, a 1.23% appreciation in that direction. Also, the simultaneous perspective that's coming with this market and direction in it, seeming positively, Egyptian stocks are dropping 39 basis points this morning, seem to be the only African stock really falling. The Nairobi stock market, the Ken stock market, Nairobi 20, not really gaining, no significant change in the market. And now let's look at other perspectives and inclination that comes with it. The $5.3 million sale of a precious rock from Mars belonging to Niger spurs outrage. A rare Martian meteorite on 8th in Niger and sold a whopping $5.3 million at a Sotheby's auction in New York, prompting outrage from scientists and cultural heritage and the defenders of this, who are now seeking answers and its return. A Martian meteorite weighing 24.6 kilograms and discovered in Niger was auctioned at the said price. The meteorite, known as NWA 16788, is the largest Martian rock ever found on Earth, estimated to have traveled 140 million miles off from Mars. Concerns were raised about the legality and the ethical implication of exporting this significant artifact from Niger. Still in Africa, as U.S. officials visit Mali, as juntas eye economic and security ties. Junta-led Mali is courting U.S. investment and backing in its fight against Islamist insurgents as it works to strengthen a regional bloc of military-led government in West Africa and fostering economic cooperation. U.S. officials, including Deputy Assistant Secretary William Stephens, met with Malian Foreign Minister Abdoulaye Diop in Bamako to discuss these matters. Mali aims to strengthen ties with a regional bloc of military-led government which face diminished U.S. security partnership. Still in Mali, looking at the states of the barrack staff and the court case that we see. An appeal for the unconditional release of 4 Barrick Mining Corporation employees have been in custody since November 2024 on allegation of money laundering, terrorism financing, tax violation, and other regulatory offenses, all of which Barrick strongly disputes, was denied by a Malian court on Tuesday. Barrick disputes the claims, citing legally binding agreements affected by Mali's 2023 mining code. Operations at the Laola Agunkoto mining complex have been suspended due to gold export bans and state control measures. The decision was made in the midst of increased tensions following the 6-month state's management of the Barrick Laola Agunkoto gold mining complex by Mali military junta. Meanwhile, Africa's top crude oil producer partners with S&P Global to launch West African fuel price benchmark. Nigeria is collaborating with S&P Global Commodity Insights to create regional pricing benchmark for petroleum products in West Africa. Multiple observation indicates that this was unveiled at the West African Refined Fuel Conference in Abuja. The initiative seeks to create localized price indices for petrol, diesel, aviation fuel, and liquefied petroleum gas (LPG). Despite being a major oil and gas producer and an emerging refining hub, West Africa still relies on global reference, the reference market for pricing, benchmarks that often fail to reflect the region's specific supply chain realities, said Farouk Ahmed, head of the Nigerian Midstream and Downstream Petroleum Regulatory Authority. This initiative aims to address the mismatch in current global market references. The country is currently responsible for 31% of West Africa's refined fuel supply. Still in Nigeria, let's look at the state of U.S. exports in Nigeria. The United States exported more crude oil to Nigeria than it imported in February and March 2024. The United States exported more crude to the country comparatively looking at February and March 2024 and marking the first time such a trade reversal has occurred according to the U.S. Energy Information Administration EIA. The shift was driven by a slowdown in demand along the U.S. East Coast due to refinery maintenance, as well as rising demand from Nigeria's newly operational Dangote refinery. Since commencing operations in 2024, the $20 billion Dangote refinery, the largest in Africa, with a processing capacity of 650,000 barrels of crude oil per day, has significantly disrupted oil market and is even projected to end decades gasoline trade from Europe to Africa, a market valued at $17 billion annually. Gross U.S. crude exports to Nigeria reached 111,000 barrels per day in February and 169,000 barrels per day in March, while imports fell to 54,000 barrels per day and 72,000 barrels per day in the same months, respectively. By comparison, imports stood at 133,000 barrels per day in January. The decline in U.S. crude import from Nigeria was also linked to seasonal maintenance at the Phillips 66 Bayway refinery in New Jersey. Imports from Nigeria have since risen following the Bayway plant's return to full operation in April, while Dangote's output was temporarily slowed by unplanned maintenance. A 1 million tons of petrol is shipped overseas as Dangote refinery takes Nigerian fuel global. The Dangote refinery, which this year began exporting premium motor spirit PMS, also known as petrol, to markets beyond Africa, recently highlighted a major milestone with regards to the initiative, marking a transformative step in regional energy trade. According to the chairman of the business and Africa's richest man, Aliko Dangote, in June and July 2025, the refinery successfully exported 1 million tons of PMS, signaling an increase in its operational scope. The facility achieved its first gasoline export to Asia in June 2025, followed by earlier low-sulfur fuel oil shipments to Singapore and multiple consignment of jet fuel to global markets. A recent plan from Nigeria's richest man prompts fear of potential job losses. In June 2025, Africa's richest man, Aliko Dangote, via the Dangote Oil Refinery, announced a breakthrough initiative to provide fuel straight to petrol outlets across Nigeria beginning August 15. The initiative was initially praised as transformative but faced criticism for potential monopolistic consequences. Groups like Petron and Nogasa voiced concerns over market control and job losses due to bypassing traditional intermediaries. Still in Nigeria, let's talk about the worries of operators in Nigeria as Nigeria misses out on $1.3 billion SAATM opportunities. The Nigerian aviation industry is facing a significant challenge as the country misses out on the $1.3 billion single African air transport market opportunity due to the lack of international transit hubs at major airports. The Single African Air Transport Market Initiative, a flagship African Union project, aims to liberalize air travel across the continent, fostering economic integration and stimulating tourism and trade. Despite being a signature, Nigeria's aviation industry is being left behind due to the absence of dedicated transit zones that facilitate seamless international connections. Despite being a signatory to it, the aviation industry is still struggling in that regard, based on the absence of dedicated transit zones that facilitate seamless international connections. Industry stakeholders, including the chairman of APs, Alan Oyema, and the managing director of Aero Contractors, Captain Adu Sanusi, expressed their frustration with the current situation. And now we'll go on a quick break, and when we're back, Business 360 will continue looking at some indices still within the context of Nigeria, and afterwards we'll transcend to talk about global economic standings and the markets. Don't go anywhere. Welcome back. It's your Business 360. And my name is Vladimir Kim. As still beginning from the context of Nigeria, as President Bola Tinubu sets first quarter 2026 deadline for National Single Window. President Bola Tinubu has directed the National Single Window Steering Committee to ensure the platform becomes fully operational by the first quarter of 2026. The directive was delivered during the first steering committee meeting at the State House Abuja on Tuesday, where Tinubu was represented by his Chief of Staff, Femi Gbajabiamila. The Special Advisor to the President on Information and Strategy, Bayo Onanuga, disclosed the outcome of the meeting in a statement titled, President Tinubu sets first quarter 2026 target for the takeoff of National Single Window projects. Tinubu said the recent tax reform acts, signed into law in June, underscored the urgency of accelerating reforms and pursuing Nigeria's $1 trillion economy targets. Gbajabiamila highlighted the importance of financial and trade reforms in achieving national economic transformation. Still in Nigeria, Nigeria's public debt to GDP ratio dropped to 39.4% in the first quarter of 2025, following the successful rebasing of the country's gross domestic product by the National Bureau of Statistics. The rebasing exercise, which revised the GDP base year from 2010 to 2019, expanded the scope of economic measurement to capture sectors such as the digital economy, creative industries, fintech, and informal activities. This adjustment significantly increased Nigeria's nominal economic output and improved its debt sustainability indicators. As of March 31, 2025, Nigeria's total public debt stood at 149.39 trillion naira, comprising 78.76 trillion naira in domestic borrowings and 70.63 trillion naira in external debts. The newly rebased GDP, now valued at 379.17 trillion naira, covers a 12-month period from the second quarter of 2024 to the first quarter of 2025, adjusted upward to 372.82 trillion naira, bringing the debt ratio down to 38.8%, and domestic and external debt contribution also declined to 19.95% and 18.85% respectively. At the time, the country pre-rebased GDP was put at 277.49 trillion naira, placing the debt to GDP ratio at 52.13%. And now let's look at the top 10 African countries with the highest IMF debt in July 2025. Just in July alone, the International Monetary Fund, IMF, is reported to be looking into the disbursement of loans to Egypt and Ethiopia, raising new worries about Africa's growing reliance on IMF financing. And while these financial aids are frequently portrayed as lifelines for weak countries, the long-term consequences of high IMF debt are raising concerns across the continent. Egypt got $1.2 billion after completing the fourth assessment of its $8 billion loan program, increasing the total amount disbursed to $3.5 billion. Similarly, Ethiopia received $262 million following a successful third program review, although its financial situation remains fragile. The government is discussing a $8.4 billion restructuring with official creditors under the G20's common framework, while also preparing to repay $1 billion Eurobond. The combined burden of IMF loans and commercial debt is straining national budgets and impeding growth projects. These stances highlight a larger issue. While IMF loans can help prevent economic crisis, they frequently come with stringent conditions, austerity measures, and little freedom for domestic development goals. Without proper management, a government risks being locked in a cycle of borrowing and repaying, hurting economic and public trusts. This list is courtesy of data from the IMF website. Egypt ranks #1. Let's look at the top 10 African countries with the highest IMF date in July 2025. According to the list we're having, at #1 is Egypt, about 7.422 billion US dollars. It's that date to IMF. At #2, Cote d'Ivoire, 3.104 billion. Kenya, 3.022 billion. And we're talking about Angola at #4, Ghana #5, and DRC, Congo DRC #6, and Ethiopia #7, Tanzania #8, and #9, Cameroon. And before you get to talk about the market, quickly let's go to global economic standings around the world, beginning with inflation in Ethiopia. The annual inflation rate in Ethiopia rose to 13.9% in June 2025, slowing from 14.4% in each of the previous 2 months. Prices moderated for food and non-alcoholic beverages, increasing by 11.7% from 12.1% in May. Particularly other food products and bread and cereals are stalling after a 1.3% rise. Additionally, cost increase at a softer pace for housing and utilities, clothing and footwear, restaurants and hotels, alcoholic beverages and tobacco, and furnishing, as well as household maintenance. Quickly, let's go to the market. Let's go to the data and check inflation data for Ethiopia. The chart indicating Ethiopia's inflation rate. Well, the chart indicates a further downward trend for Ethiopia. Ethiopia's inflation has been slowing down. Ethiopia's inflation has been slowing down. At previous standing by June, it was 19.9%. So began to slow down, and by March, it had gone to a quick low, a huge one in that, and has been consistent in dropping in current point about 11.9%, indicating a slowdown in the cost of commodities in Ethiopia. And now to Nigeria. Looking at Nigeria, Nigeria holds key policy rate at 27.5%. Nigeria's central bank kept its key interest rates unchanged at 27.5% on July 22nd, 2025, holding steady for a third consecutive meeting. Rate eased to 22.22%, consecutive monthly decline. However, core inflation eased in June from 22.28% in May, while month-on-month inflation rose slightly to 1.68%. And geopolitical volatility, notably the potential price impact from U.S. tariff, which could fuel imported inflationary pressures. Against this backdrop, the MPC underscored the importance of maintaining a steady monetary policy. The monetary policy stands to ensure the full unwinding of inflation.
Given the persistent uncertainty in the policy environment to maintain its current stance on, the committee remains committed to price stability mandate and would take appropriate measures to foster stability and confidence in the economy. In addition, recent data on the Purchasing Managers Index indicates that the Nigerian economy remains on an expansionary path. The external sector macroeconomic environment. In addition, recent data on the Purchasing Managers Index indicates that the Nigerian economy remains on an expansionary path.
And now to the market as gold dips on U.S. trade deals. A gold dipped to around $3,420 per ounce today, snapping a 3-day winning streak and pulling back slightly from a 5-week high pressured by a wave of trade deals that dampened the metal safe haven appeal. President Trump announced a massive trade deal with Japan, saying the U.S. will impose 15% reciprocal tariff, lower than the previous threatened 25%, while Japan will open its market to more U.S. goods. The agreement follows a smaller deals with the Philippines and Indonesia, lifting hopes for further agreement before the August 1st deadline. Quickly, let's run through the market, the energy market first, and afterwards we'll look at agricultural market, then we'll shift and look at the cryptocurrency market and the Naira. Quickly, let's look at the energy market. Energy market indicates the price of crude oil at $65 falling 0.09 point. Brent, Nigeria's price benchmark, also falling 0.102 a point. Quickly, let's look at the states of the metals. A metal price of gold at $3,430 per ounce, falling 1.25 points this morning. Silver price gaining just slightly. A silver price falling 25 a point this morning. Quickly, let's go to the financial market. Let's look at the state of the US dollar against the Naira, and we close for the cryptocurrency market. The US dollar against the Naira price level stands at 1,528 Naira, equally falling but not with much difference. And now to the cryptocurrency market. Our crypto market indicates the price of Bitcoin at $118,227, a Bitcoin falling by 1,781 points. Ether also falling, Binance gaining 8.7 points, Cardano, Solana, Ripples on the negative. Well, it's a story of the market this morning in a direction that comes with it. Positivities and negativities at the end of it, but the Trump tariff are taking center stage to drive the commodities. Here we draw the curtain in today's edition of Business 360. Thank you for being a part of it. My name is Blyden Okem, and thank you for watching.